Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how market makers and traders are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. So please feel free to post on topic questions and comments, and it will definitely make it more interesting for me and hopefully for everyone else as well. All right, let's get started. And what I want to cover today, my agenda for today, is first of all go over news items for the week, economic data, as well as key earnings that will be coming up later on in the week. Then I'll go through my positional analysis for both the S&P 500 and the NASDAQ. And then finally I'll talk about setups. All right, so first of all, news items, economic data for the week. And there are a few higher impact data releases this week. And first of all, tomorrow, and I don't know how high an impact that's going to be, consumer confidence tomorrow at 10 a.m. Change my color here. All right, so that is at tomorrow at 10 a.m. And then on Wednesday the 26th, this may be a little bit higher impact. Durable goods orders, 8:30 a.m. Eastern Time. And then on Thursday, GDP at 8:30 a.m. Eastern Time. And then finally on Friday, and this should be a bigger day for data releases. First of all, there's the PCE at 8:30 a.m. Eastern Time, and then another consumer sentiment number, Michigan Consumer Sentiment at 10 a.m. So that wraps up the key or higher impact data releases for the week. And then there are also some key earnings. So on Tuesday, after the market closes, Google and Microsoft both report. And then on Wednesday, after the market closes, Meta reports. And then on Thursday, after the market close, Amazon reports. So a bigger week this week than last for economic data and earnings. All right, let's take a look at some charts now. Go over my positional analysis, and we'll start with the S&P 500. This is the S&P 500 futures, ES futures, in Bookmap. And before I go any further in this chart, I'm going to take a look at a larger time frame. And this is the SPX showing price. This is a Thinkorswim 20-day 1-hour chart showing SPX price and key Spotgamma levels. And these levels are shown in the red horizontal lines. They're provided to Spotgamma subscribers for a variety of platforms. And let me just point out a couple of the key levels. First of all, there's the put wall, the SPX put wall at 4,000. And that's also the key gamma strike. So the put wall is the strike with the largest net negative gamma that can be expected to act as support. And it's also the key gamma strike or absolute gamma strike. And that's the strike with the largest absolute gamma. And note that level did consolidate. So the put wall moved up from 3,900 last week. And remember, last Friday was April expiration. So as expected, a number of the levels did change from Friday to today. And then the key gamma strike last week was at 4150, and today it has moved down to 4,000. So emphasizing that the importance of that 4,000 level. And then the volatility trigger is at 4115. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position is negative gamma, and they have to trade with price to hedge their delta exposure, and that tends to increase volatility. And above that level, like SPX is trading now, market makers' position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure. And then finally, the call wall is at 4,200. So those are the key daily levels that I track every day, and there are a few other levels on that chart. And we can look at those right now in another Thinkorswim chart. And this is the 1-day, 1-minute chart. Again, Thinkorswim, showing the key levels that are in play for today, as well as price. And as shown on the chart, the SPX is trading in a very narrow range today, above the volatility trigger and below the 4150 level that has frequently been resistance. And that was noted as resistance today in the Spotgamma AM Founders Note. 4150 noted as resistance. All right, let's take a look at Bookmap now. And we'll see the same levels. And actually, in this range today, the only level, the SPX level, that's in range now is the 4115 volatility trigger. That's the SPX 4115 volatility trigger. I've got two columns of notes here. The first is the Spotgamma cloud notes, and as you can see, showing the key SPX levels, and it looks like Spotgamma is using the same ES SPX difference that I'm using today, which is 22 points, and it may be a little bit less than that. It looked like it was, when I checked a couple of hours ago, it was between 21.5 and 22, and that's the difference between ES and SPX. So what these levels are showing, and this is my cloud notes, showing this key SPX levels converted to an equivalent ES number, and then shown on the chart. And I'm also showing key SPY levels. There's the SPY 411 volatility trigger, and the SPY 412 key gamma strike. And then notice here this 413 level was definitely in play today and this morning, acting as resistance. So that a SPY 413 acted as resistance today. So I'm showing SPY levels, SPX levels, and then finally also big round numbers in ES. So that is, I show the zeros and the 50s. So that is the ES 4150 level. All right, so that's the S&P 500. And let's take a look at the NASDAQ now. So the NASDAQ reversed lower. Or around 945. Then did a retest of this yellow line is the QQQ 317. And it's also the NQ 13,100 level. So the NASDAQ found resistance at those two levels. Again, the NQ 13,100 and the QQQ 317. And chopped around at the kind of these combined levels. This is the NDX 12,936. That's a C4 level, combo 4 level. And the rank of importance is 1 being the most important, the highest level of gamma, and 5 being the lowest. And then that is also the QQQ 315 key gamma strike, and that's probably the more important of the two levels there. So price chopped around that level, found resistance at the 317 level, chopped around the 315 level, and finally moved lower to the lower edge of the daily expected move. And this is something that I added to my chart over the weekend. I've been doing this for the last week. And these levels for the NQ have been gold. They're working great. So notice, first of all, with the reversal lower at around 1030, that level was a target. And then when price finally reached that level, it reversed higher, very close to that actual level. Just amazing, but those levels are working great. And again, that is the lower edge of the daily expected move. All right, so I have the same type of levels on my NQ chart. First of all, Spotgamma levels. Here's the 12 call wall, 12,975, and note that Spotgamma, I believe, is using the same point difference. Let me just check on that. For NDX, NQ, and ES, SPX, and that is that's not right. Whoops. Let me see if I can find that. Yeah, they're using a 22-point difference, and I calculated an 87-point difference. So these levels shown here for Spotgamma are not in the right place. So for example, here is that combo level, the 12,936, shown down here, and it's actually up here, right around the QQQ 315 level. So I'm showing my cloud notes here are probably are more accurate. So key NDX levels, there's the 13,000 level, and also QQQ levels, and then finally this lower edge of the daily expected move. Okay, I'll go over setups in a few minutes. So that is showing the levels that are in play for today. And Luke comments in YouTube. Luke, I appreciate your kind words. Contact me in Discord if you want to have a longer conversation. I'm in Discord. My name is Doug P. So I'll be able to interact there. All right, so let's talk about shifts and levels now. And as I mentioned, last Friday was the end of the April expiration cycle, expiration on the third Friday of the month. So a lot of the levels are being reset now, and there were quite a few shifts in levels. First of all, for SPX, volatility trigger lower, put wall higher, call wall higher, and key gamma strike lower. And we'll look at these levels in just a minute. We'll look at the absolute gamma levels. So shifts higher and lower for the SPX, and for SPY the volatility trigger shifted lower, and then the key gamma strike shifted higher. And for NDX, all the levels shifted lower. Volatility trigger, put wall, call wall, and key gamma strike. And then finally for QQQ, the volatility trigger shifted higher, put wall shifted lower, and the call wall shifted higher. So quite a bit of reshuffling of the absolute gamma levels. So let's take a look at those now. All right, let's start with SPX, and I'll go through SPX, SPY, NDX, and QQQ. So first of all, here are the absolute gamma levels for SPX, and this one's pretty obvious. That's the strike with the largest absolute gamma. That's the absolute gamma strike at 4,000, and that's also the put wall, the strike with the largest net negative gamma, and that can be expected to act as support. And then the call wall remains at 4,200, or I'm sorry, moved higher from 4,150 last week to 4,200 today, and that's the strike with the largest net positive gamma, and that can be expected to act as resistance. All right, so that is the SPX. Those are the gamma levels that are really defining the range, the near-term range for SPX. 4,000 on the downside to 4,200 on the upside, the put wall to the call wall. In your SPY, zoom in on this, and for SPY, the key gamma strike is now at 412, the strike with the largest absolute gamma. Put wall down at 400, that's pretty obvious, the strike with the largest net negative gamma. And just to point out what this chart is showing, it's absolute gamma, market makers positioned at these strikes, and above the zero line, positive gamma or call gamma is shown with the orange bars, and below the zero line, negative gamma or put gamma is shown with the blue bars. So positive gamma or call gamma shown with the orange bars above, and negative gamma or put gamma shown with the blue bars below. So there's the put wall, the strike with the largest net negative gamma, and we saw the key gamma strike at 412. And then here's the call wall. That's pretty obvious. The strike with the largest net positive gamma, and that can be expected to act as resistance. And Spotgamma was calling for support at the 410 level today and resistance at the 415. Those are the levels for SPY. And Hector, good morning. Ask a question in Discord. I'll take a look at that later. That's kind of beyond the webinar, so I'll take a look later. All right, let's see if we can take a look at NDX. Probably not. Need to do a refresh for some reason. So let's go to NDX now. And really no need to zoom in here. So this is the 12,975 strike, and that is the key gamma strike and the call wall. Put wall is not in the range of this chart. Now let's take a look at QQQ. I'm going to zoom in on this. So for QQQ, 315 is the key gamma strike. 310 is the put wall. And the call wall has moved on up to 330 now. So for QQQ, the call wall moved higher, the put wall moved lower. So there's the range for QQQ. 310 support at the put wall and up to 330 resistance at the call wall. All right, let's take a look now. Go back to SPX. I want to point out a couple of other things. So first of all, I showed this on Friday, and again, remember Friday was April expiration, pointing out and this is again from last Friday, pointing out the change from the current expiration, which would be Friday, and that's shown by the green line there, and this is the gamma model, and then the next expiration, which would be today for SPX, showing that dropping lower. And what this was showing on Friday was the drop in gamma and positive gamma there, indicating that a lot of that gamma, positive gamma that was supporting the market was set to expire on Friday, and that would lead to higher volatility, a wider trading range today, and that was expected again based on the expiration of the strikes with a lot of positive gamma. All right, the next thing to take a look at is the Vanna model. And I do talk about this every day. This is showing two curves. This is for SPX. This first curve, this light gray line, is showing how market makers' delta notional changes with changes in price and price alone. That's shown here on the vertical axis, and price, the strike price, is shown here. And what this is showing is that as price increases, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure as price increases. And that is typical of a positive gamma environment, with market makers trading against price to hedge their delta exposure, and again that tends to subdue volatility. And then on the other hand, this pink curve is adding in the impact of changes in implied volatility, and that's the Vanna effect, the change in implied volatility, the change in delta with a change in implied volatility. So what this is showing is on the upside, there's really not much of a Vanna tailwind for a move higher. The gray curve and the pink curve are pretty similar. And then on the other hand, if price decreases and implied volatility increases, This is showing that market makers' delta notional will increase, and they'll have to sell futures to hedge their delta exposure. And that's pretty typical as the market shifts from positive gamma to negative gamma. All right, that's the Vanna model. And we'll just look at it for SPX. Then finally, I want to take a look at some data. And first of all, I'm going to look at two things here. First, I'm going to look at gamma notional. This is market makers' position on the gamma curve for SPX, SPY, NDX, and QQQ. And note these numbers are all positive, indicating market makers' position on the gamma curve for all these index products is positive. And again, in a positive gamma environment, this means that traders are short calls, market makers are long calls, and they have to sell futures as price increases to hedge their delta exposure. And then as price drops, they can buy back their short futures. So they're trading against price to hedge their delta exposure in a positive gamma environment. And these numbers did drop from last week. So for example, just for SPX, gamma notional was 5.3 billion, and today it is 4.1 billion. And on Friday for SPY, gamma notional was 9.2 billion. Today it's 7.9. And for QQQ, on Friday it was 4.2 billion, and today it was 3.3 billion. And one other thing I want to point out is this Spotgamma index. And what that is, or you can read this pop up, and it's a proprietary measurement of the total amount of market gamma. And the reason I'm pointing this out is I posted a chart in Discord, and I'll show it here, of the last 30 days for SPX. And what I wanted to illustrate is the impact and how you can use that number, positive or negative gamma, to anticipate volatility in trading range. And unfortunately, the number that I've been following for quite some time, the gamma notional, when Spotgamma changed the interface on April 1st, they changed apparently changed the algorithm for the gamma notional number. But they kept that Spotgamma gamma index at the same number, so I could compare that number before this date, March 30th, shown by the number 2 here. So what this is showing is that Spotgamma gamma index, when it's negative, that's indicating market makers' position is negative gamma, and that indicates, and they used to have a scatter plot showed that showed that as the Spotgamma gamma index, the SGI, dropped below 0, that the daily range would expand. And that's shown here in this uptrend labeled number 1. So what this is showing is the SPX moved 260 points higher in 13 trading days, and that was when the SGI was less than 0. Market makers' position on the gamma curve was negative, and remember, they're trading with price to hedge their delta exposure. And then the SGI flipped to positive on March 30th, and notice then after that SPX settles in a trading range, at approximately 100-point trading range that at the time that I put this together over the weekend had been SPX had been trading in that more narrow range for the last 17 days. So that is a clear indication of the power of tracking that number, positive or negative gamma. And I posted this in Discord. Okay, so Again, remember that's also this gamma index. All of these numbers, SGI, dropped from last week. And still positive for SPX. And this is the number that I, for the SGI, that I track most closely. I think it's the most meaningful. All right, let's take a look at some setups. So overall, I was expecting, and this is what Spotgamma noted in the AM Founders Note, and they have been noting this for a while, noting that, again, that positive gamma expired last week, looking for higher volatility, wider trading range, and they were favoring actually a move down. All right, so let's take a look at the S&P 500. We'll start with the S&P 500. Oops. I'm showing a combined signal. Oops, wrong tool. A combined signal for the S&P 500 showing SPX, SPY, XSP, which is not significant, and ES. So these are showing options trades in SPX, SPY, and ES, and showing the hedging impact of those options trades in real time. So this is HERO, hedging impact of real-time options. And this white line is showing price, and the purple line is the HERO signal. And we'll take a closer look at this in a minute. And normally this is the signal that I look at for any trading the S&P 500. And let's just take a look at the components. So we'll start with SPX, and then we'll come back to this signal. But I just want to take a look at the individual signals. And notice overall this notional value is about minus 500 million. All right, so we'll start with SPX. And notice this number is positive at 417 million. And let's take a look at SPY. Minus 561 million. And then ES minus 362 million. So ES has been overall, just judging by the direction and the line here, the most negative. So let's go back to the combined signal. Zoom in on this. And we'll talk about some setups this morning. So first of all, there was a couple of divergence. There were a couple of divergent setups. It took a while for this to play out. Notice that HERO drops, while price, it did drop a little bit, then made a similar high, and that's at the SPY. I believe that was the SPY 413 level. And then HERO diverges again, setting up a short. So let's go take a look at Bookmap now. Go back to the S&P 500. And yes, that was at the 413 level. So traders were taking negative delta positions as price approached a level. So the way to approach this, once you see the divergence set up in HERO, is to watch Bookmap here for a potential level for a reversal, and there it was, not a really significant level, but the SPY 413 level acted as resistance again, and you can see the shift in order flow here in the ES futures. Trend break, and notice the pink volume dots. Note the clear shift from green moving up to the 413 level to now pink as price breaks this trend line at the 413 level. Again, traders are taking negative delta positions and watching the order flow here. These lines in the subchart were showing that, first of all, the dark blue to pink line, that's cumulative volume delta, and also the yellow line, that's sell stop orders fueling the move lower. All right, let me check for questions. And Hector, I asked, when you have a consolidation through a lot of days, how do you know if it is accumulation or distribution? And you wait for a breakout of higher low or lower low. And this is not something that I look at. I'm day trading, so I'm looking at new day every day. And I'm talking about what I look at every day. I'm looking at levels and how traders and market makers positioned, how those levels change from day to day, and then looking at order flow and hedging flow. So I'm not looking at consolidation through a number of days. I did look at that SPX chart, but that was just in showing the impact of a positive gamma environment. So I'm anticipating that some of that positive gamma was released on Friday, leading to a potentially higher volatility and larger trading ranges for the day. So that's how I look at that. All right, so there's the SPX, the short setup. Let's go back and take a look at Hero now. So we saw again the divergent setups. Took a while to play out, about an hour or so. The short was at SPY 413 at 10:30. Trend break, shift in order flow. Let's go back and take a look at Hero. So here's the current signal. It looks like traders are taking negative delta positions again. Or they were. Sorry. Taking negative delta positions, and then they decided to join the party. Now negative delta again. It looks like that, of course, the best move so far was this morning, the two divergent setups, and the one that finally paid at 10:30. All right, let's take a look at NASDAQ now. And for NASDAQ, I'll look at QQQ. And very nice divergent setups here this morning in QQQ. So note the falling Hero line, and then price reverses lower, and this started earlier than the S&P 500. And then there was a move higher, reversal higher, and Hero makes a lower high, and price makes a lower high. And there was the best setup, just right around 10:30, a little bit before, just a little bit before the S&P 500 moved lower. All right, let's go take a look at, we'll take a look at, first of all, NQ. So as I mentioned before, here's the first. Let's zoom in on this. Here's the morning session, the first reversal lower. Not really at a any discernible level there. There may be something as traders were taking negative delta positions, then a retest of the 13,100 level. Again, as traders were taking negative delta positions, and there's the best setup, the reversal right before 1030. Down to the lower edge, the daily expected move. And order flow was bearish. Note cumulative volume delta. Pink here indicating it's negative. So shifts from dark blue, positive, to negative. And then also the falling yellow line indicates that sell stop orders were helping to fuel the move lower. So there again is the short setup, reversal at the QQQ 317 level, the NQ 13,100 level, and then the NDX 13,000 level. As order flow shifts bearish, note all the pink dots coming in, market sell orders. All right, so that's the setup in the NASDAQ. And then let's take a look now at how traders, options traders, were reacting at this touch of the lower edge of the expected move for the day. And let's go back, let's check the time. So that was right around 12 noon Eastern time. Let's go back and take a look at Hero now. And note that as the NASDAQ was heading down toward that level, options traders were taking positive delta positions, anticipating a reversal at that level. That didn't last long. But so far, price has continued to move higher as order flow shifts bullish. Note the rising cumulative volume delta, CVD, and also iceberg orders that help to initiate the move higher. These are shown by this light blue line. Larger traders buying the weakness with iceberg orders they use to hide their size. All right, so the NASDAQ continues higher. Let's go back and take a look at Hero. And so far, this afternoon, traders are, after this first move higher, starting around 1240, taking negative delta positions. Let's just zoom in on this afternoon session. Yeah, still negative delta. Let's see what they're doing. So net today, and this is pretty typical of an index, traders are buying calls. That's a positive number, shown by the orange line, and they're also buying puts, shown by that negative number there. And net, the total is negative. All right, let's take a look at some stocks. And the first one I want to take a look at is Amazon. And this was a good short setup this morning. Not quite a divergence here, but a clear confirmation of a short. Call wall above at 110. Price makes it up to about 109, and then options traders started taking negative delta positions, and price moves lower. Let's go take a look at Bookmap. Go to Amazon. And there's the reversal at the 109 level. I'm going to zoom in on this. There's the reversal. Call wall up above at 310. Note the shift in order flow. Green dots to pink dots, market buy orders, and then aggressive sellers start to come in at 109, shown by the pink dots, pink volume dots there. Then a break below VWAP, and price moves lower. And the primary target was the 105 liquidity level. So nice 4-point move lower in Amazon with a clear signal from Hero, from options traders. And let's take a look at Meta. Go back and take a look at Hero. I'm going to zoom in on the morning session. And I thought this was setting up in the morning a divergent short, not as clear as the S&P 500 and NASDAQ. Hero falling, price falls. And one other thing to point out here is this actually a confirmation of a long setup here in the afternoon. Let's go back and take a look at Bookmap now. And note the reversal at the, oops, this level should not be there. That was from last week. I need to clean that up. The reversal higher at the 211 level. Let's go back. I want to take a look at Hero again and see if, so there are no key gamma levels, no gamma levels in play for Meta. Just that 211 level. All right, I want to take a look at one other thing. Earlier today, actually yesterday, Marty McSpy, doesn't look like he's in here, maybe he's in YouTube. I asked, please tell me why you preferred to trade shares instead of options. So I set up an example in Thinkorswim, and this is a simulated trade in Meta. So I was looking at Meta at that around that lower strike, lower point of the day, And again, just a simulated trade. Took a long call. This is a call that expires on Friday, and that's for stocks, single stocks. That's if you want. That's the shortest term available. The Friday expiration. And one thing that I want to point out, now the implied volatility is quite high. That's because Meta reports earnings this week. That's noted here. Implied volatility 107.40, quite high. So you're paying a lot for the call. And notice it's $925. So from my point of entry, so actually let me show them. So there's the break even at expiration, and that is the 212 strike plus 925. Comes out to 221.75. That's shown here. So by the end of the week, to make any money at all, Meta has to trade above 221.75. What this is showing, for those of you who may not be familiar with a risk graph, this is showing a profit and loss line for today. And then this is showing profit and loss at expiration on Friday, at the end of the day on Friday. And this is showing as time passes, this purple line will drop down to the blue line. So you're paying a pretty stiff penalty for owning this call, and that penalty is, right now theta is 100 minus 120, almost $121 a day. So just to own this call, you're paying, losing $121 a day. So that's why I don't like to buy options, and especially calls, and especially high price calls. So Marty, again, it looks like you may not be in here. I'll post this in Discord later, and urge you to watch this recording. All right, so right now it's up $85. I guess the only advantage of this is you have a built-in stop loss. So, but you're paying quite a penalty, and this theta number will increase every day. So you'll pay a higher and higher penalty as price moves on, and the purple line drops down to the blue line. So that's why I don't like to trade buy options. I prefer to be a seller of options. All right, the next setup, let's take a look at NVIDIA. Good short setup in this this morning. Let's take a look at Hero. Go to NVIDIA. And there's as usual, a pretty strong confirmation between hedging flow and price action, shown here for NVIDIA. Let's see what traders are doing. So net, it is still negative. So that means they're buying puts and selling calls. I'm looking at this notional value, this number, purple number over on the right side of the screen, the vertical axis. Let's take a look at order flow. And as traders were taking negative delta positions, NVIDIA made a series of lower highs, and 1030 moved below VWAP. and a couple of actually 3 higher liquidity targets below there at 270, 268, and then finally at 267 around noon Eastern time, when other stocks, that was about when the QQQ, the NQ, reached that lower edge of the expected move for the day and started to move higher. Let's go back to Hero and see if there were any gamma levels in play. And no, the hedge wall down below it at 265, and that's not in range today. And note the shift higher again around noon as traders started taking positive delta positions. All right, let's take a look at Tesla. And Tesla is another stock with a very strong correlation between hedging flow and price action. And note that Tesla reverses lower at the 165 hedge wall right here. And traders start taking negative delta positions and price moves lower. Let's go take a look at Bookmap. And again, note the sharp drop lower at the 165 hedge wall. And note I'm not really marking those key gamma levels on stocks anymore. I'm just trying to save some time in the morning. Those levels are shown on the Hero charts, and that's enough. It's just a little bit too much work to show these key gamma levels that change from day to day on my stock chart. So I'm just marking the gamma levels on NQ and ES, and that's it. So here's the short setup in Tesla today. Reversal at the 165 hedge wall. Lower high, break below VWAP with a 160 high liquidity target. There's Tesla. Let's do a quick check of the indices again. So it looks like now that the S&P 500 is starting to stall a bit at the 412 key gamma strike, the SPY 412 key gamma strike. Let's take a look at NASDAQ. Also consolidating a bit just below the QQQ 316 level and the NQ 13050 level. All right, let me take a final look at questions. Hector, again, I hope I answered your question. So when I was showing this chart here, and this may be what you're thinking about or referencing in this consolidation, I'm not really thinking about accumulation or distribution and a breakout higher or lower. What I'm pointing out in this chart is the change in market structure based on market makers' position on the gamma curve. And the way I use this in a negative gamma environment shown in the range of this up arrow on the left, the number one, I'm looking for a higher trading range every day in a negative gamma environment. Again, higher volatility, higher trading range. and as market maker's position changes from negative gamma to positive gamma, shown with this number 2 here, I'm looking for more range, trading range type days. That's how I'm using this. Lower volatility and a more narrow trading range up and down. Notice there were more trend days in this range shown by number 1, and more range days trading up and down. That's how I approach this, looking at the difference in negative gamma and positive gamma and how that might have an impact on trading during the day. So I'm not looking at this as any long-term impact, other than what I might expect during the trading day. Okay, all right, that's all I have for today. I want to thank you for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.